Ladies and gentlemen, good day and welcome to H1 FY26 results conference call of Anya Polytech Fertilizers Limited, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Harshit Ghanshyani from Kirin Advisors. Thank you, and over to you, sir.
Yes, thank you. On behalf of Kirin Advisors, I welcome you all on the conference call of Anya Polytech Fertilizers Limited for H1 FY26 results. From the management team, we have Mr. Yashpal Singh Sagar, Chairman and Managing Director, Mr. Anurag Srivastava, Senior Advisor, Strategy and Projects, Mr. Anurag Agarwal, Chief Financial Officer. With that, I now hand over the call to Mr. Yashpal sir. Over to you, sir. Thank you.
Thank you. Good afternoon, everyone. I am pleased to welcome you all to Anya Polytech Fertilizers earnings conference call for the first half of FY26. Thank you for joining us today and your continued confidence in our company. Incorporated in 2011, Anya Polytech Fertilizers has grown into diversified and integrated enterprise with a strong presence across agri inputs, fertilizers, micronutrients, packaging solution, certified seed, cattle feed, and renewable energy-led circular economy initiative. This journey of expansion and value creation culminated in the company become publicly listed in 2025. Over the year, we have built a multi-business platform through our group entities: Aravali Phosphate Limited, Anya Agro and Fertilizers Private Limited, Yara Green Energy Private Limited, and Polyform Packaging Private Limited, enabling us to serve a broad and growing set of customers across 17 states. With modern manufacturing unit in Uttar Pradesh, Rajasthan, and Madhya Pradesh backed by ISO 9001 and 2015 certification, we have established a robust foundation that supports scale product diversity, and consistent quality across agriculture and industrial value chain. The first half of FY26 has been a period of steady operational progress for us in both the packaging and fertilizer segment. Demand remained resilient across our core product categories. Our SDP and PP woven sack, POPP bags, and fabric rolls portfolio benefited from strong offtake across fertilizer companies, cooperatives, and large industrial buyers. At the same time, our fertilizer vertical includes zinc, sulfate, monohydrate, heptahydrate, single superphosphate, micronutrients, and specially blended, continue to see healthy transaction support by rising agriculture consumption and our expanding relationship with some of our major clients such as Kripco, UPL, IFCO, Coromandel, and others. The balanced momentum across both business underscores our ability to operate efficiently across diverse segments while maintaining customer-centric execution. The key development was the successful integration of our wholly owned subsidiary, Polyform Packaging Limited. The addition of this facility has strengthened our SDP PP manufacturing capabilities, improved delivery timelines, and allowed us to offload part of production load from Sharjah port unit. Located in a cost-efficient industrial zone, the unit provides a significant operational benefit, including lower electricity cost, automated looms, enhanced printing capacity, and flexibility to serve port dispatch and high volume orders more effectively. This acquisition aligns with our long-term strategy of expanding capacity, enhancing cost efficiency, and strengthening our ability to serve large recurring institutional orders. We are also making steady progress under Yara Green Private Limited, fully owned subsidiary of us, which plays an important role in driving our sustainability and renewable energy agenda. With 24 acres of solar infrastructure in Bhopal and additional land embarked for circular economy initiatives, we are laying a strong foundation for energy efficient manufacturing, reduced carbon footprint, and long-term cost optimization. The initiative complement our broader commitment to sustainability, which includes farmer support program, education initiatives, and community engagement. During the first half of FY26, we reported consolidated total income of 99.70 crores, with EBITDA of 13.39 lakh crores and net profit of 6.14 crores. The performance reflects the contribution of our diversified product portfolio, expanding market presence, and stable demand in both agro inputs and packaging segment. We continue to focus on improving capacity utilization across zinc sulfate and SSP unit, optimizing raw material consumption, and strengthening efficiencies in our packaging operation. While margin reflects the interplay of product mix and input costs during their period, our long-term fundamentals remain well aligned to deliver sustainable, profitable growth. We also have been working on broadening our product offering in line with evolving market needs across fertilizer. We continue to upgrade our micronutrient blend, expand our reach to zinc-based products, and diversified into value-added nutrient formulation. In packaging, we are enhancing our capabilities to eventually cater to flexi packaging solution and printed laminates across where the demand is rising sharply across FMCG, agro, and industrial sector. Initiatives will further strengthen our competitive positioning over the medium term. To support multi-segment growth, we continue to invest in capacity expansion, technology integration, product diversification, and supply chain efficiency. Our focus remains on deepening our presence in high-demand agricultural regions, scaling our packaging solution portfolio, expanding institutional relationships, and enhancing operational effectiveness across all units. At the same time, we are building internal capabilities across marketing quality, customer service, and R&D to strengthen long-term competitiveness and support the scale we aim to achieve. Looking at our priorities are clear. Accelerate growth across high-margin products categories, strengthen our footprint in fertilizer-intensive region, expand packaging volumes through improved capacity and turnaround time, and advance our renewable energy and sustainability roadmap. With the stable business model, consistent customer relationship, and a disciplined approach to operations, we remain confident in our ability to deliver sustainable growth and long-term value for all stakeholders. Thank you once again for your participation and continued trust in our company. I would now like to open the floor for your question on our performance, operation, strategic outlook. Thank you.
Thank you so much, sir. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Question comes from the line of Vinod Shah from VS Venture Private Limited. Please go ahead.
Hi, good afternoon, sir.
Good afternoon. Good afternoon.
Yes, sir. So I have three, four questions. So, first one is what is our long-term strategic roadmap? Are we positioning ourselves as a packaging company or a fertilizer company or agri input company?
Sir, in packaging industry, post IPO, we have already achieved full portfolio. So now we have infrastructure for SGP, PP, BOPP, Leno bags, and jumbo bags. So we have a full portfolio of flexi packaging. Now we are trying to achieve 100% capacity in longer run. Then new verticals are opened after the global scenario because the biggest competitor was China. But now China is facing huge tariffs in U.S. U.S. market is open for India. Our product is cheaper in global market, so there is huge demand. We are analyzing the scenario. In case if this scenario continues, then we might think for further expansion because this market is open from last 4-5 months. So we are watching the overall scenario. In fertilizer sector, we are already expanding our product portfolio capacity in single super phosphate. This year we will achieve 30% more additional capacity, and by next year we will achieve 100% capacity. In fertilizer sector, our target is to cater. Currently our major products are micronutrients, but we are now started with macronutrients also, so to cater maximum grades of macronutrient, and company is working on it. And in green energy, initially we came up with biomass solution. So we already got the land allotment from the government, and in this 6 months we will establish the unit. And we are also doing some solar projects for which we have already acquired the land in Bhopal. So in these 3 sectors we are growing. I mean, our vision is to grow in every sector. Because packaging is our core sector, because we started this company from packaging, and we are fine. Globally, there is huge potential for an Indian company. Fertilizer sector is doing very good this year. Even previous years it was very good, but it is becoming attractive. So we want to increase the product portfolio, and we want to reach to maximum stage. And green energy is our new initiative in which I think we have long-term vision to expand in solar power and other energy sectors.
Okay, so that's great. And sir, given the visibility in both packaging and fertilizers, so in which vertical do you think the next phase of growth will be more? We are going into both sections, but
if you will ask, if you'll compare them, then fertilizer sector is more attractive because new products are open in India, and government is continuously encouraging local manufacturing because they don't want to import fertilizer. They have huge obligation. So we are getting all those benefits, and our customer base is continuously increasing. Post IPO this year we added UPL. They are our shareholder also, and we are doing marketing with them, which is a very big company, international company. So I think fertilizer sector is more attractive.
Okay, sir. And sir, HDP and CP bags section, so there are multiple regional players who operate at a lower price point. So what is our sustainable competitive advantage over there?
Sir, our competitive advantage is for institutional buyers. All our institutional buyers are very close to us. We are located in between them. So one institutional buyer to one institutional buyer, Crypto and IPO, we have long-term agreement. Then we are supplying this material bags to sugar mills, Tata Chemicals, other companies. All these companies are around us only. So only the port orders are we are supplying in other states. Otherwise, all these companies are located near Bareilly, Shahjahanpur. So for port orders, we have already acquired this Bhopal unit, which can easily cater Hazira port orders. So competitive advantage, the biggest competitive advantage is location. Second, power plays a very important role in this sector. So we are getting uninterrupted power from fertilizer company. We are not using state government power. We have zero, breakdowns or anything. Our production capacity is increasing like every year. We are achieving the rated capacity.
Okay, sir. And are we planning to move up in the value chain into the higher margin products?
Yeah. We have already started in fertilizer. We are focusing on the high margin products only, and we have started with our tie-up with UPL is bringing a lot of high margin products like chelated salts of all the micronutrients, like some patented pesticides we are adding, which we will get the exclusive rights, and the product will be developed by UPL, and we will pack them in our under our brand name. Similarly, in woven bag also, we have introduced jumbo bag and lino bag, which are high margin products.
Okay. And how much margin improvement we can expect in those products and overall on company level?
The average margin, if you are asking about EBITDA margin this quarter, it is showing less because some of our raw material, our purchase was expensive in first quarter because of global scenario like sulfuric acid, but EBITDA margin should be 17 to 19%.
Okay. Thank you so much, sir. That's all.
Thank you, sir. Our next question comes from the line of Disha Chodia from Sapphire Capital. Please go ahead.
Hello.
Hello.
Am I audible, sir?
Yeah.
Yeah. Thank you for the opportunity. So I have a couple of questions from my side. Firstly, in H2 FY25, like the second half of the previous year, we saw a major dip in margins from, I think we did 21% around in H1, and now it dipped to 10%. So what was the cause of that?
One cause is like we have that CapEx. We are doing investing in capacity expansions, as we mentioned before. Our depreciation is increased. And secondly, I was telling that globally, our sulfuric acid is our major raw material. Sulfuric acid prices have gone up drastically. They are increased by 250% in last 6 months because of global scenario. Our purchase is slightly higher, but because we take orders for 6 months contract, in another 6 months, we will cover it up.
So what is the sort of margin we're looking at for the second half of FY26?
As I mentioned, the EBITDA margin will touch around 17 to 18%, 17-19%.
In the second half?
Second half.
All right. What is the sort of growth that you're anticipating for this year?
This year, because in first half we have already touched 100 crores. This year, consolidated, we will be above 200 plus. As you mentioned, in IPO presentation also, that our target was 160, 180. This year we will achieve more than 200 crores top line.
All right. And what is your...
This is without Yara Green. Yara Green will come in production, I think, from April onwards. Next year that will add additional value.
So that Yara Green will come from April 2026, will add in the next year, right?
Yeah.
All right. And what is the sort of CapEx that we're doing for this year and for next year? Any sort of number you have for that, sir?
CapEx we have like last year. Anurag, will you provide the number for CapEx?
Currently we have done total CapEx of rupees 5 crore 50 lakhs, in which we have done already last year 2 crore, and in current year almost 3.5 crore.
And will we do more in the second half?
Yes,
we
we
will
will do more because solar is not included in that CapEx which during IPO presentation, and some other new projects we are starting along with that.
So total CapEx for this year will be 550 CR. Is that right?
How much?
Right. In Anya. In Anya, it's 550, and in Aravali Phosphate, it's 150.
And Polyform?
In Yaragiri, it will be around 7-8.
So all the CapEx is done through Anya Polytech. So what CapEx we did in Polyform in acquiring this unit?
CapEx in Polyform? CapEx in Polyform, sir.
While acquiring
the Polyform, it's around 7 years.
So total बताओ कितना? और
Total CapEx 19 CR होगा, जो कि हमने IPO में we have given in IPO. Yaragin में it's 9 CR and Anya 7.69 and Aravali it's 3.2.
Okay, got it. And so for the revenue, so what was the revenue breakup for this half between the fertilizers and the packaging segment?
I think it's Anuragji, 45-55. Fertilizer is slightly higher.
In polymer division, it's 32 CR and balance from fertilizer division.
Including Polyform?
Including Polyform, sir.
Okay.
So 32 CR was from the packaging segment, right?
Yes.
Yeah.
And so what, like, because you mentioned that we see fertilizer segment with, like, we will witness higher growth there. So what is the sort of mix you foresee between the fertilizers and the packaging segment going ahead?
Ma'am, both the lines are, both the businesses are different, and the team and operation team, everything is different. So they both are separated. We are seeing potential in both the lines because the U.S. market is open for India after a long time, because Chinese companies were dominating in that market. So because of the tariff issue, now all the companies in the U.S., they are buying material from India. So overall sector has gone up, and all the companies are fully occupied. So we are overbooked with the order. Now we are trying to increase the margins. We are selecting our orders smartly so that we can get maximum margin. But there is a limitation in this sector because we cannot go beyond 10, 11%. But in fertilizer sector, we have like some special products, patented products, in which the margins are slightly higher. I mean, we can do much better with those products. But those products will take time to make the market, and we are already doing, started the marketing. So in another 1 or 2 years, we will see more growth in fertilizer only. That's why I was mentioning that.
So, this is the last question from my side. What is the margin profile for fertilizer versus the packaging segment?
So, ma'am, overall, if you'll ask margins, then they might go 15-20%.
For EBITDA margin for fertilizer?
Fertilizer EBITDA margin would be 20, around 20.
20%.
And kitna?
Sorry?
Sir, in fertilizer section, EBITDA margin is almost 20%, and in polymer division, it's almost 10 to 12%.
Yeah.
Okay, all right. That'll be it from my side. Thank you.
Thank you.
Thank you, sir. Our next question comes from the line of Priya Jain from Green Capital. Please go ahead.
Hello.
Ms. Priya, you may proceed with the
Hello.
question, please.
Am I audible?
Yes, you are.
Yes, ma'am.
Sir, I'm recently started following Anya, and I have quite few questions with me. So starting with, how do you manage raw material sourcing, especially given high dependency on commodities like polymer and zinc?
So, ma'am, for polymer, raw material is not an issue because all the major big players are into this segment. So we are buying material from Reliance, Indian Oil, GAIL, all these companies are providing us raw material. Only thing is, the price they keep, the price is directly linked to petrochemicals price. So once like the petrochemicals are going up, the prices will go up. In fertilizer sector, in like different depends, if we are manufacturing single super phosphate, then we are buying our raw material from Hindustan Zinc in Udaipur and Rajasthan State Mining Corporation. For zinc, we are participating in metal auctions, and we are buying material from Tata Steel, SAIL, all these companies. So raw material suppliers are all the big institutions of India. Hello?
Okay, yes. I have a few. I was going to your PPT actually. And I have one more question. What cost efficiencies do you expect from the discounted recent government initiatives such as polyform unit and electricity discounts?
Ma'am, I didn't got your question. Can you ask again?
Yeah. So what cost efficiencies do you expect from the discounted electricity and government incentives at the polymer unit?
So, ma'am, this polymer unit which we acquired now, polyform packaging, it is in under Startup India scheme, and we have 3 years of Anurag, correct me if I'm not wrong, 3 years or 5 years of income tax
3 years of
exemption.
tax benefit.
3 years tax benefit.
3 years of tax benefit. It depends when we want to take it, as the government has given us flexibility, and the power cost is less. So in Shahjahanpur, suppose our power cost is 9.5 rupees per unit, then here it is 5.5 to 6 rupees per unit. So these are two initiatives, and the company comes under Startup India, so we are getting we are bypassing all the government tenders. If we are applying, there is a surety that we will get some orders. So these are the benefits which we are getting from government and polymer sector. Hello.
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 Yeah. So, hello.
Yes, ma'am.
Yeah. So, if I ask for the next 2 years, is there any product innovation pipeline for micronutrients and stability fertilizers?
Yes, ma'am. We are working on chelated salts, as I mentioned. So zinc chelated salt is already introduced in the market, and in zinc chelated salt, margins are very high, like more than 30%, because it's a very concentrated product. So we are now developing chelated version of all the micronutrients like ferrous, magnesium. In another 6 to 10 months, we will place all the chelated salts in market, which are very high margin products. And currently, in Indian market, the companies are importing this material from China. We are the first few manufacturers of India who have all the range of chelated micronutrients. So that is one of our new product. And then we are coming up with new NPK grade 5-15-0-10, which has recently introduced in India, and it is also a bit high margin product. Then with UPL, we are working on some chemicals and pesticides which are patented by UPL till 2035, and they are giving us exclusive right to manufacture and sell them.
And one question on this polyform packaging is any key synergies expected after acquiring 90% of polyform packaging, and how will it enhance margins or capacity utilization?
So, ma'am, because we have some orders from ports, Gujarat ports. And polyform packaging saves logistics, and the production cost is less there because of the government initiatives. And to get the orders from PSU companies is much easier through polyform. So whenever we have to take order, suppose last year we took order for onion bags, and so we use Polyform there because Polyform is registered under Startup India. Energy cost is less and centrally located. So to cover Maharashtra or Gujarat, Polyform is an advantage for us. That's why we acquired the company. We are acquiring 100% stake. Only 10% is left because some formalities are still left. So those will be done in another 1 month.
Also, we are currently for H1 doing around 138 crores revenue. So should we expect the top line for the FY26 420 around?
Pardon? Can you ask again?
Yeah. So currently your H1 revenue is around 138. If I'm not wrong, right?
138? No. That was
Around
99.70 crores half yearly.
Oh, your FY25 is 138.
वो total उस साल का है.
हाँ.
So
Okay.
in this 6 months, we have achieved 99.70. So this year we will
Great.
touch more than, we will do more than 200 crores.
Great. Good. All the best. I think I'm looking forward to have a follow-up.
Thank you.
All the best.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question comes from the line of Ishita Sen from Urban Spare Consultants. Please go ahead.
Hello, sir.
Hi.
I have a couple of questions. So, what is your capital allocation philosophy? Is it capacity expansion, acquisitions, or debt reduction or strengthening working capital?
So, ma'am, we have allocation for expansions. We are continuously expanding from last 5-7 years. So for another 2 years, we have strategy and we are expanding our product portfolio and entering into new ventures. As far as debt reduction is considered, we are planning issue for completely making the company debt-free. So we will plan it in January, in which the promoters will put their stake, around 70-74%, and rest 26% we will ask from market. So we are already discussing with merchant bankers. So whatever the debt is on the company, so we will make it debt-free this year only.
Okay. So, given rising finance cost, do you plan to deleverage or refinance at more favorable terms?
No, actually, so far we are thinking to reduce the debt, as much as possible, and save the interest cost. Refinancing, we don't think it's an option.
Okay. So my last question will be what revenue and EBITDA CAGR are you targeting for the next 3 to 5 years, and what will be the main growth catalyst?
So, main growth catalyst would be fertilizer and green energy. And by 26-27, I'm targeting 350 crores.
Okay.
And EBITDA 18-20%.
Okay. Okay, sir. Thank you. That's all from my side. Thank you for answering my question.
Thank you, ma'am. Thank you.
Thank you. Our next question comes from the line of Mahesh Seth from VY Capital. Please go ahead.
Yeah, good afternoon. Can you hear me?
Yes, we can hear you.
Yeah. So, I just wanted to know, how do you differentiate the HDPE, PP, and BOPP bags, in market, where product quality is often standardized across vendors?
How how we
Like,
can
how do you
you ask the question?
differentiate what? Sir?
Hello.
Yeah, I just wanted to know that, like, how do you differentiate between HDP, PP, and BOPP bags in market where, like, the product quality is often standardized across vendors?
BOPP bags are different. They have different kind of lamination and films, and it is used for BOPP is majorly used for food grains like food grain packaging and some special packaging or some high-end fertilizer packaging. While for HDP and PP are the basic materials, only thing is government standardized that all the fertilizer will be packed in HDP because of the temperature issue. So PP cracks at high temperature. So HDP is used for majorly for fertilizer packaging, and PP bags are used for other bulk packaging. So all these products are different. I mean, BOPP bags are expensive and they cannot be used in fertilizer. So fertilizer is very average product.
Okay. Okay, fine. Got it. And, can you tell me, like, what percentage of customer opt for value-added packaging, and, like, how fast is this segment growing?
This segment is growing because we have checked the CAGR, so segment is growing by 6 to 7% and by till 2030. And so far, flexi packaging is the only environment-friendly plastic because it is 100% recyclable. And in India, every company is doing recycling. Most of the companies, we are also doing that. So this product, once we deliver the product, so there is no threat from that angle that it's a plastic, and the packaging is itself irreplaceable in bulk packaging. So we see that the sector will continuously grow. In India, a lot of industries are coming, a lot of fertilizer industries are coming, and demand will remain same, and it will increase because FCI, Food Corporation of India, is also shifting from jute bag to BOPP, PP bags just because of price and quality. So the demand will be there, and definitely there will be growth in the sector.
Okay. Okay, got it. And, like, are you also considering entering into the FMCG flexible packaging market, like, which, typically offers stronger margin, but, like, requires more regulatory compliance?
Yeah, but we so far we have not planned. We are replacing plastic with woven fabric. So we are planning to make small packaging for this sector, but it will be because it is better than single-use plastic. So we are finding better solutions for industrial packaging. But so far, we are not entering into plastic packaging.
Okay. Okay, got it. And, can you also tell, like, what steps are being taken to, convert the PP bag under utilization, like, into in revenue growth?
So PP bag, we have institutional buyers for PP bags, and currently we are making fabric of PP, from PP production facility, and that fabric is going to US for end use. So there is a huge demand from US for PP fabric, and we are catering that demand only.
Okay. Uh, uh, Like, I also wanted to know, like, how material will the solar and circular economy business become, like, in terms of revenue contributing in next 3 years?
Which one? Which business you're talking about?
Solar and circular economy.
Solar. So solar, we have already started a pilot project of 700 kilowatt, and company is utilizing that energy into self-captive use. So we are redeeming our units by solar energy. So it is profitable for the company. Company's energy cost has gone down little bit. So with another 1 or 2 megawatts solar power, we will reduce our energy cost, and that will add another 3 to 4 crores saving to the company.
Okay. And anything regarding circular economy business?
So in green energy, you're talking about green energy.
Yeah. Yes.
So green energy, we are working on 3 projects. Solar energy, which is for self-captive use. Biomass pellets, those are for to replace the coal with biomass. And third is, we are entering into pulp molding tableware. So though biomass pellets project will be completed in next 6 months, and pulp molding will be completed in under 10 months. So both the projects will add another 50 to 60 crores to company's turnover.
Okay. And also I wanted to know, can this circular economy, which is a green energy vertical, can this evolve into an independent profit center rather than just a cost saving initiative?
No. Only the solar part is part of cost saving initiative. Rest other 2 projects are we are for pulp molding.
Will be profit center. Both of them will be profit.
We have approached in pulp molding. We have approached companies like Apple, IKEA, and we will do business with them. We will provide packaging for them through pulp molding. And for biomass pellets, we have already LOIs from different power plant, Reliance and PepsiCo. So the material will be provided to them. So only solar energy is for self-use.
Okay. Got it. And are you also exploring any forward or backward integration opportunities, like in polymers, chemicals, or agri inputs?
So the opportunity is there, we are suppliers for fertilizer industry, and we are supplying micronutrients to supply to the same companies. So all our products are aligned with the same market and same company. Even for green energy also, in biomass, we will buy biomass from farmers only. So ultimate customer is farmer, whether it is fertilizer, packaging, whether it is a micronutrient or some other company. Only we are doing business with big institutions, but ultimate end user is farmer.
Okay. Okay, fine. That's it from my side. Thank you for answering.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Ladies and gentlemen, as there are no further questions from the participant, I would like to hand the conference over to Mr. Harshil Ghanshyani for the closing comments. Thank you, and over to you, sir.
Yes. Thank you. Thank you everyone for joining the conference call of Anya Polytech Fertilizers Limited. If you have any queries, you can reach us at @kirinadvisors.com. Once again, thank you for joining everyone.
Thank you, Harshil. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.